Good morning, everyone. Welcome back to the channel. Today we're going to go over Lemonade Insurance. They are one of the newest insurance companies of the 21st century, offering everything from renter's insurance, homeowner's insurance, pet life, and last but not least, car insurance. This is actually their latest vertical that they're going into, and so we'll talk about that today. We're currently going for $31.55 at a $2.3 billion valuation, so super low. This is a pretty, I would say, small cap company. $2 billion. Year to date, it's down 13%. It's been flat pretty much since 2022. We've had a little jump in the past year, but other than that, it's pretty much been flat for the past 3 years. Is this company undervalued? First things first, we're going to look at the main KPIs for Lemonade Insurance from 2022 to 2025. Take a look at the main KPIs. They have been growing. Quarter over quarter, they have been growing steadily. Top things we're going to look at is in-force premiums, the premiums per customers, total customers, and the gross loss ratio. So with improving KPIs, quarter over quarter for the past 2.5 years, but the stock price has been flat for the past 3 years. Could this company be undervalued? And so we'll take a look at quarter 1 2025, which they just posted, and we'll take a look at some of the regular data first real quick. This is quarter 1 of 2025, and let's go ahead and get started. All right, so first things first, total revenue and earnings per share, top line, posting 151 million versus 119 last year. That is up 26% year over year. So total revenue all the way from 2022, every quarter has been improving since 2022. So we want to see companies growing total revenue 25 to 50% year over year. That's a good sign, and they are pretty much doing that. Great total top line revenue growth. Earnings per share still a little choppy. Latest quarter, they posted negative 0.86 versus negative 0.67. That is down 28% year over year. So earnings per share is still choppy. We want that to be stable and also growing 25 to 50% year over year. All right, come down to cash flows and their net income. So this quarter was the first quarter where cash flow from operations and free cash flow was actually impacted. So free cash flow from operations, they posted negative 47 million versus negative 29. That is down 58% year over year. As you could see, the latest cash flows are down pretty much over 50% year over year. Why? What happened? The number one reason is the California wildfires. So the impact of the California wildfires was in line with our expectations laid out in quarter 1 2025 guidance. So they did talk about how the California wildfires were going to impact a lot of the numbers that they posted this quarter, especially from cash flow from operations, and it has also affected their bottom line, net income. So two main reasons quarter 1 was impacted greatly for Lemonade Insurance was the California wildfires, but one of the other main reasons is because they did increase their growth spend. So Lemonade is investing heavily to acquire new customers and to scale the business, but they're not focused on making profits as of yet. Think of Lemonade as a tech company. They're trying to create a network. In the network-defined economy that we are in, scale precedes profits. And that is the reason why they are spending so much money trying to scale, trying to acquire new customers, trying to grow as fast as they can, because in this network-defined economy, scale precedes profits. And again, if we go to net income, negative 62 million versus negative 47, that is down 31% year over year net income. So, all right. Anyways, let's take a look at some of those KPIs. All right. So the main one that they have, the in-force premiums, and pretty much for the past 3 years, the in-force premiums of Lemonade Insurance has grown over 20% quarter over quarter. So for the top line in-force premiums, they crossed the $1 billion mark just 8.5 years after selling their first policy. That is up 27% year over year. So from quarter 3 2023 till the present day, it has been growing exponentially. Basically, it's showing the total annualized premium of all active insurance policies that Lemonade has on its books. Basically, it's all premiums being paid by the active customers annually. More customers that they can acquire, which has been also growing in the mid-teens to over 21% quarter over quarter. This is actually the best quarter they have on customer growth, up 21% year over year to 2.5 million customers, with the average premium per customer going at 396, which is growing at a steady 5% rate. And why does this all matter? Because this is pretty much a revenue predictor for Lemonade Insurance. Since premiums are paid monthly or annually depending on the customer, the in-force premium indicates the company's expected future cash inflows. So a rising in-force premium shows that Lemonade is acquiring more customers, or upselling to higher premium policies. And so if we look at the chart, guys, year to date, flat. We did see a little jump for the past year from the teens, but other than that, again, from 2022 till today, pretty much flat. Company stock price has been flat, but the fundamentals have been improving. So again, quarter over quarter, year over year, in-force premium, premium per customers, and the total customers have all been improving and growing quarter over quarter, year over year. And so this is a good sign for Lemonade. They are putting growth before profits. Remember, guys, in a network-defined economy, which we are living in, scale precedes profits. They are trying to scale. They want growth over profits. What are the next plans for Lemonade Insurance? That is going to be upselling their current customers into the new verticals that are going into. And one of those new verticals, of course, is the car insurance. I think the car insurance segment for Lemonade is going to be one of the biggest markets that they have. The car insurance segment is picking up speed. Quarter one marked the first quarter where cars' sequential IFP, in-force premium growth, outpaced the rest of the book. So this is brand new. It's super early in their journey, but the signs of inflection are becoming clear. So they are currently trying to cross-sell their customers right now. 2.5 million customers. Again, guys, they have 2.5 million customers that they could cross-sell to. The most recent markets they are getting to, by the way, Colorado. This is the first state launching in 2025, with more to come. They are only covering 40% so far of the US car market, so they have a long growth rate to go with this car insurance. So they say they are still in the early innings, improving unit economics and growing momentum. Lemonade Car is positioned to become both a category leader and a meaningful driver of long-term value. So it does look like they are betting on the car insurance segment for Lemonade to be one of the major growth initiatives that they are doing. And one of the main things we should be watching while they push growth in the car segment is the cash flow from operations, if this is going to start growing exponentially because of that car insurance segment. So we'll keep an eye on that this year. Just looking at some of the KPIs alone, pretty much 20 to 27% quarter over quarter, their customers are growing. In-force premium is growing, and the premiums per customers are growing. This will probably end up growing if they could successfully cross-sell car vertical to their customers, to that 2.5 million customer base. But other than that, I think in the short term, this company is going to be fine. A $2.3 billion valuation with the new car vertical. They are growing, but the stock price is doing nothing. So you want to keep an eye on that. So they currently have $1 billion in cash. The company's cash equivalents, and investments totaled approximately $1 billion as of March 31st, 2025. So a company holding $1 billion in cash, valued at $2.3 billion, so pretty much half the valuation they're holding in cash alone. They have 2.5 million customers that's been growing 20% year over year. People are paying more for their services, and they are starting to cross-sell some of the new verticals they're having. I mean, this company is growing, guys. This company is growing year over year, quarter over quarter, slowly, but they are growing. I think the stock price will eventually catch up to itself. I think getting into the car insurance business is going to be what pushes this company forward. I think this segment is going to exponentially grow this company. You could bundle your car and home, your pet renters, you could bundle everything all on your smartphone. Check out Lemonade, guys. I do think it is undervalued. A company valued at $2.3 billion with $1 billion in cash. Total revenue has been growing for the past 2 years. Customers have been growing for the past 2 years. In-force premiums and also premiums for those customers have all been growing consistently for the past 2 to 3 years. But the stock price has been flat. So I do believe this company is undervalued, and the stock price has been quiet and boring. This is the type of things that kind of interest me. $31.64. Lemonade Insurance, $2.3 billion valuation. Yeah, let's keep an eye on this one. Anyways, thanks for watching, guys. Let me know what you guys think. Give me a thumbs up if you liked the video, and we'll see you on the next one. All right, peace.